Hi, this is Jack from Alpha Charts with an educational video on what I look for in charts. Today is February 9th, 2021, about 1:45 p.m., so the market's still open. But for this video, before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my channel. I really do appreciate it. It does help me out. I'm on Twitter at AlphaCharts365. Share it with your friends and your neighbors. I appreciate that too. All right. So, what do I look for in charts? So, I'm completely self-taught, just, the guy next door, learning my way through the stock market. And this is just what I've come to look for in my charts. And this video is actually being made for my daughter who is showing some interest in um, stock trading. So I'm hoping this helps her also. And we could talk about this later. All right. So, um, what does a good setup look like, right? And that's the whole point of this. So the first thing that you have to figure out is the market healthy? All right, and so I have the cues up here, and there's a lot of things that go into is the market healthy. Every week I do a state of the market video where I go through my process of is the market healthy. In general, though, if it's you know if it is at all-time highs, it's probably a healthy market, but a lot goes into that part. That's not the point of this video, but you have to decide first, is the market healthy? Have your process for that. All right. And then you need to define your universe of stocks. So I do that by using some scans like my Finviz scan, which is also known as my favorite scan. It really has helped me stay in the best names and growth names available. And so if you're interested in that, I posted exactly how to do that scan on my educational page on my YouTube channel. So check that out. I've shared that scan pretty freely. So once we say we have a healthy market and we've defined our universe of stocks, which for me is almost always exclusively growth stocks, um, what are we looking for there? So first off, again, I'm going to use the cues in the beginning just for examples. Um, Price should be going from the bottom left to the top right, right? It needs to be in an uptrend. That's kind of what I'm trying to say here. And we can use moving averages to determine the uptrend. But basically, if it's going from the bottom left to the top right, you're in an uptrend, and that's the first thing. You don't want to buy anything that's in a downtrend. I'm trying to think of here. Let's look at XLE, right? That's a downtrend, right? Top left to the bottom right. You don't want to see that at all. What happens here? I don't know. I mean, it's still, maybe the trend changes, maybe it doesn't, but that is, just not the direction that you want to be in the market. All right. So now we determined that we want to be in uptrends. The other thing I want to look for is volume. I'm going to switch to a different chart which really highlights this, which is net. So what I am looking for in volume is these large green skyscrapers, right? This tells me that big, huge institutions are accumulating stock right here, right? This isn't me buying. This isn't Aunt Millie buying. This is gigantic institutions that are buying that are positions, are taking on a position. It could be one, it could be multiple institutions, doesn't really matter. This is huge interest. And as this pulled back, what do you see here? You're seeing this decrease in volume happen, right? So basically, nobody wants to sell here. Everybody is holding on to this. And that is, textbook what you want to see right here. And this is a Cloudflare currently. Um, then boom, there was earnings, gigantic gap up, and then after the gap, basically big green bars still, and nobody selling, right? Nobody selling, right? It keeps going higher, and again, now as it consolidates, uh, you see a decrease in volume here. So when looking at the volume profile, and I always talk about the volume profile, we're looking to see that as it pulls back, the volume is decreasing or drying up. Okay. Little tiny small red bars, giant green skyscrapers. Again, it's all about the institutions and institutional accumulation, right? Because you and I or an Aunt Millie aren't um, moving this market around. The big boys pushing billions of dollars, and they're the ones that are really moving this around, hedge funds and retirement funds and so on. All right. So that's what I'm looking for in price, uptrend. I'm looking for a specific volume profile, right? That's preferred. And then I'm going to look for different areas of consolidation. And I pulled net up because it's a great example of a double bottom. So it has everything I'm looking for. And now, if you notice, since beginning of December, it really hasn't done much, right? December to February. And if you notice, it made one bottom, came back, touched we'll call this the neckline, then made a second bottom and came back. And now it broke out right here, actually on some volume, which is really good to see. So the idea behind the double bottom is that you got to a point and there were sellers right here, right? This was where the sellers really stepped in. And so there was some selling pressure that happened. They only got so far because it's a stock that's under accumulation. So the sellers pushed it down so far, came back up to the same point where we found sellers before and found some more sellers up there, right? And then so it pushed it back down. And sometimes on the second one, sometimes there's an undercut here to really put some fear that this is about to roll over. And then it comes right back up. Sometimes that doesn't happen, but that's just something to be aware of. Um, it came back up, came to this area, gapped up through the area, which means that institutions were probably stepping back in and pushing this higher. And there's an earnings date coming up, so that's they're trying to get in before the earnings. Maybe they know something, maybe they don't. I don't know, but this is the double bottom pattern, and this is this was over 2 months. It could be bigger, it could be smaller, but that's what I'm looking for. One bottom, two bottoms. Sometimes it's rounded. Sometimes it's rounded, pointy. Sometimes it could be. It does the shape doesn't so much matter in this, but this is probably the more common of the two is the rounded, and then the second one is a little bit sharper, but it doesn't have to be. So that's a consolidation that I like to play, and then you could play the breakout right here. Um, you know, uh, yeah, I would play the breakout here, especially on the volume right there. That's beautiful. There's some cheat areas on the round. If it's a rounded one, you may be able to cheat in certain areas, but the breakout here makes the most sense to me in this situation. All right, so that's the double bottom. The other another one that I look for is a cup and handle, and I think BLDP is a great example of that. So this is Ballard Power Systems, and I currently own Net. I own this one also. This is Ballard Power Systems, and you'll see the cup and handle is something that looks like a cup. We'll just kind of make this a little bit bigger so you guys can see it easy. And it's basically got to a point. It found sellers, right? And then there's a nice pullback, and it's usually kind of a rounded, kind of pullback. It doesn't have to be perfectly round. Came back up to the point again where we found sellers, right? So now the pullback, but the pullback is actually much shallower and usually on decreasing volume. So that's what makes the handle. So there's your cup, there's your handle, usually on decreasing volume. You see as it's making the cup, and you see there's some greater selling in the first part, the left side of the cup, but as it's coming to the right side, the volume on the down days is really drying up and you're seeing some more accumulation. So slowly people are changing their tune on this one. yeah, there's a little distribution right there after earnings, and then it got up to that point. You see a lot of accumulation here, pulled back a little bit on volume, and then boom, busted out on some good volume, and that would be the buy point. There's always an alternative buy point for this, which if you could draw kind of like that, you may be able to buy as it breaks out here. That again, that's you have to be careful with that because as you can see, it failed. It would have failed right there on you. Um, didn't really negate the pattern, but you may have had just been stuck in this a little bit longer underwater until it busts out again. But so the alternative buy point would be here, potentially, but the real one would actually be as it breaks above on volume this day right here. That's the true one. All right. And so what it do? It busted out, and then it had to consolidate a little bit more. It kind of like moved higher, then came back and retested. That's I call that the BRB. B, I say B right back. Boom, retest, and then moved higher. There's actually a really technical name for that, but I don't know what it is. But it's called BRB. Um, anyway, came back, kind of retested, consolidated a little bit right there. Boom, moved higher, and it's still going higher. So a good example of a cup and handle, and then shooting higher. All right, so that's double bottom. That was cup and handle. Let's talk about the inverse head and shoulders. So an example of inverse head and shoulders is go-go. And so basically, once again, found sellers. So a consolidation period has to ensue, right? Because we have to cycle through these sellers and put into new buyers and people that think that this is going to move higher. So found sellers here, came back to this general area, found sellers here, came back a little bit deeper. Again, every time it hits this area, we're changing hands of people selling, new people buying. So it could take a little bit of time for that to happen. As we go through the pattern, happened one more time, kind of broke out, kind of retested that area, right? And now it's got supported. That is, by the way, this check back that supports is probably the most bullish thing, high probability thing that you could see on a chart. So even if you missed a breakout right there, the pullback into here and then the move higher, that's really strong. So this is a really strong looking chart that we know that this area held around 11, came back. Now the 23-day EMA is holding and it's moving higher. But the idea of the pattern is you get one lump, a deeper lump than the right shoulder right here, left shoulder, head, right shoulder. Break out, hopefully on some volume. Even if it may retest afterwards, hopefully on low volume, and then just start to move higher. So that is an inverse head and shoulders. Another one that I want to show you guys is a flat base. So flat base, CELH, Celsius energy drinks. This is a good example of flat base. We got to a certain area, and every time we get into this area, we are finding sellers. But the overlap is actually very, very tight. You're not seeing a lot of big, like the double bottom or even inverse head and shoulders, these big pullbacks. You're seeing very, very, very late pullback. A lot of times you'll see volume dry up. Every so often you may see a potential distribution day in there, and I'd have to dig in and see if this was actually distribution or not, where the sellers were. But either way, you get a lot of these overlap, and this is a type of pattern that will wear you out if you're in this and are waiting through this entire base here. I mean, you're talking, you're in this from August, we'll call it, and all the way to November. That's a long time for literally no price movement. But you'll see when it broke out, it was creating energy, and it broke out to a 29% move in one day, right? That was earnings. So 29% in one day, gigantic leap up. And you may say, hey, that's not a good place to buy because it's up 29%, it's extended. And I agree with that, right? I'm not buying 29% up. But you see this type of power right here on this type of volume, I mean, this gigantic skyscraper, look where it went. So maybe it wasn't a bad place to buy, right? It doubled from that point. Um, but better risk reward would be through this little consolidation period right here, right? You could have bought right here for, you know, the same or similar type gain. Anyways, the point is the flat base. The flat base, it will wear you out, but it's a base. It's a pattern that's really building energy, and then when it does move, the move could be very powerful. All right. So next one we're going to talk about is a high tight flag, and I'm going to switch to Trader Lion's website because they explain the high tight flag very, very well. I'm on TraderLion.com, and what this is that you have a prior move of 100 to 120%. And I think it really could be even higher than that, but 100 to 120% over 4 to 8 weeks. So it's a double in a very short period of time. And then you get a sideways, the flag part, over the next 3 to 5 weeks with a 10 to 25% pullback, right? So you want to see a very tight range in this flag. And then the idea is after the 3 to 5 weeks, it breaks out again and you potentially get another double off this pattern. So I'm going to show you a few setups that look like they could potentially be a high type flag. First one is going to be plug. And let me go ahead and switch to the weekly chart because I think the weekly chart will show it very well. All right, so here we go. Get my rolling ruler out. High type flag. Even if we measure it from here, you'll see it went up 143% or so, right there. And that was over, 1, 2, 3, 4 weeks. Okay. So a very strong, very powerful move. Hits the 4 week mark. Good. And now it's starting to flag 1 week, 2 week, 3 weeks, 4 weeks. So we're still in the 3 to 5 weeks, as it says, but we have to check the pullback. And so we're going to go, this was the top of the flagpole right here. And I'm going to go to the bottom of this one, the lowest mark, 20% pullback. It keeps us within that 10 to 25% range. So there you go. Plug is a potential high type flag. So what do we want to see with this? It would have to, it could go one more week, but then you want to see it start breaking higher, right? Taking out and closing above and starting its next move higher. And then that would be completion. Also, look on the weekly chart on this one. These gigantic green skyscrapers compared to the down days, the red days. I mean, that is what you want to see in a stock. That is a powerful accumulation going on by some big, big boys. So yeah, definitely high take flag potential. Unplug. I'm going to show you one more here. Here's Lemonade. So Lemonade, we'll call this the breakout. So I'm going to start it from here, go all the way up, 175% move. Again, way above the minimum requirements of the 100 to 120%. Then it consolidated 1, 2, 3, 4. This is the 5th week. So if it's going to be a high type flag, today is Tuesday, it needs to start moving higher this week because that's the 5th week. If it doesn't, then it may, just be a bull flag, which we'll get into next. But let's just look and see if the pullback is about 17%. So just make sure I measure that right. Boom. Boom. Yep, 17, 18%. So well within the 10 to 25% range. So again, it still is a potential high type flag if it starts to move higher this week or, just at the start of next week. So you want no more than 5 weeks. So this is the 5th week. Very, very, very powerful pattern. I think plug looks like it has a real chance. Lemonade does too, depending on the end of the week. But this pattern right here, very high chance for a high type flag. Again, I own Lemonade and Plug so far, as well as Ballard and Net. I do not own GoGo at this point or Celsius. Okay. And then I'm going to show you the next one, which is going to be a bull flag. All right, we'll use Palantir. Again, another one that I own. We'll go back to the daily chart. So here we go. He had a big move up, and then you had this consolidation, kind of looks like a pennant or a flag. But because the direction is up and to the right, this would be considered a bull flag, right? And so the idea of a bull flag is that we need to consolidate, again, hopefully on lower volume, which we're seeing, right? And you have to consolidate. And then when it's ready, it will break out of this consolidation on volume, which we definitely got there, right? Broke out. We had actually some follow through on some more volume, which is really nice to see. And then kind of came back. It retested the breakout. So there's your BRB right there, and then it's starting to move higher again. Just exactly what you want to see. So this is textbook bull flag up again. This flag may be maybe a little heavy. I don't know if there's any rules as far as how long the flag has to be. I haven't seen any, but there could be. But I love this consolidation and how it moved higher right here. So beautiful look here. Again, the idea is a bull flag is in the direction of the trend, right? And the inverse of that would be a bear flag. Is if this was going down, then you would get this flag, and you would expect a lower price in the future. With a bull flag, the expectation is a higher price. Now, if it breaks lower, that would be an expectation breaker, and that's a whole different story that you don't want to be a part of. But yeah, this would be looking like it wants to move higher. Again, we love the BRB, right? Higher probability. So you missed this, right? You felt like, oh, it's too extended. It gave you a chance as it pulled back on lower volume to get in and have a great risk reward setup right here, right? You didn't miss anything. And then it moved higher. So there you go. That's a bull flag. So we went over, let's see, we went over double bottoms, cup and handles, inverse head and shoulders, flat bases. We talked about high tight flags. We talked about bull flags. We talked what a BRB is and how that's a very, very powerful price action if it comes back and retests the breakout area. That's what I'm looking for. We talked about how we want to see skyscrapers on the moves up and real shallow on the consolidations. Again, net is my poster child for that. Just really, really beautiful. Price plug. You know, just beautiful, right? Beautiful, beautiful. That's what you're looking for in a chart. So so these are so amazing for these setups as of today. But the bigger thing is when you see another chart and it's looking like this and like this and like this and how well it's holding up, like that should it should speak volumes to you as far as being a great looking chart and potential to move higher very quickly. All right, so let me do a quick recap. The first thing that I want to look for when I look at the market is what is the health of the market, right? Are we in a healthy market based on, I look at, sentiment, I look at bonds, and I look at obviously leading indexes. I look at, things like SMH. And again, I go through everything in my state of the market video. So once I come to the determination that this is a healthy market, uh, I always, want to make sure that I define my universe of stocks, because even though there's 5,000 plus stocks out there to trade in and invest in, I don't want to trade in 5,000 stocks. I want to trade in maybe, 50 stocks or 75 stocks that I know pretty well. And probably it'll be even less than that, to be honest with you. It'll probably be, on my focus list, 5 to 10 stocks maybe that I'm really interested in. But my universe may start out with 100 or 75, and I'm going to narrow it down to just the best of the best of the best. It has to have constructive price action on the chart, right? Like if it's not going from the bottom left to the top right, it's not really constructive price action. This is what we're looking for. Has to be an uptrend. These moving averages, as much as this went sideways, the 65-day never did. It stayed an uptrend the entire way. It needs to be have volume that is showing accumulation, right? Knowing that the big entities, the hedge funds and the ETFs and the pension funds, everybody are controlling the market. We need to look for signs of accumulation on the chart, right? That's what I'm looking for here, just signs of accumulation. Um, we need to show a favorable consolidation pattern. So for me and what I'm comfortable with, I'm looking for double bottoms. I'm looking for cup and handles, inverse head and shoulders. I'm looking for flat bases, high tight flags, and bull flags. And that's it. I'm not looking for really any other pattern but those. Um, and that's, and they're very similar psychology in all those patterns. It's they all look a little bit different, but the psychology itself is fairly similar of the market participant. Um, and my entire goal of this entire process is to stack the odds in my favor, right? So I know if it's an uptrend, it's more likely to continue the uptrend. I know if I'm seeing some massive accumulation, it's more likely to be supported on the pullbacks, right? I know that if it's got a double bottom look to it and it's coming up to the neckline, I know I'm going to watch that for a volume breakout here because chances are it's going to continue higher. So again, just stacking the odds in my favor. And if it fails or if something goes awry, that's also information. And obviously we have risk mitigation for that. All right. Well, that's what I got for you today. I hope you liked it. It's what I look for in a good setup. I went over my chart patterns. Again, leave me some comments, like and subscribe to my channel. I really do appreciate when you guys do that. I try to answer every single comment out there. Um, again, I hope that you guys learned something. I'm going to learn something from you all. So thank you very much. Find me on Twitter at AlphaCharts365. I'll link to the Trader Lion high tide flag chart in the description below if you want to take a look at that. And good luck out there. Okay. Again, find me on Twitter and subscribe and like. Goodbye.